So yeah, I guess we'll get started. Just so everyone's aware, there will be forward-looking statements in this presentation. If you'd like to know what those are, go ahead and look them up on the company's disclosure on their website. The presentation has been updated for this, and with that, I'll let Akiba take it away. We're going to do a full run-through today because there's a lot of new people, and yeah, Akiba, why don't you run us through the Mako mining story?
All right, great. All right, thanks, Deb. My name is Akiba Leisman. For those that don't know, I am the CEO of Mako Mining. And what we're doing right now is three things in northern Nicaragua. First and foremost, we're building what will be the highest grade open pit only mine in the world. We're about 80% done building that initial 500 ton per day project. We're expecting to have first gold pour in January of next calendar year, meant to have commercial production in early Q2 of next year. We're in the process right now of updating and frankly redoing the 2015 resource estimate. I'll walk you guys through a little bit about what to expect for some of the technical adjustments that we're making to the model, which for all intents and purposes will make the grade of the resource substantially higher than what was purported back in 2015, which in and of itself was an extremely high grade 7 gram a ton deposit. So that resource update for the 500 ton per day operation will be out this quarter, probably the first, maybe second week of September. Now, secondly, we've made a discovery a few kilometers to the south of our mine, the San Albino mine, in an area called Las Conchitas. I don't think there's any doubt in my mind that we have a second deposit over at Las Conchitas. We right now have a single rig doing some exploration work over there, putting out pretty fantastic results. The objective over there is sometime next calendar year to have a maiden resource over at Las Conchitas, such that in early to mid 2022, we'll demonstrate the feasibility of an integrated economic study to mine at 1,000 tons a day between both San Albino and Las Conchitas, such that by the very end of 2022, we'll be mining at 1,000 tons a day. In fact, all of the infrastructure that we're building right now for the 500 ton per day mine is very easily adjusted and expandable to 1,000 tons a day when the time is right for very minimal additional CapEx. So, and then thirdly, and probably most importantly, is that we do think that we're sitting on an orogenic gold mining camp, which is a geology very distinct for what you see at some of our compatriots in Nicaragua and then more broadly in Central America. Those deposits tend to be volcanic hosted epithermal deposits, which for all intents and purposes tend to be relatively small in scope. There are some fantastic epithermal deposits around the world, so don't get me wrong, epithermal deposits can be great. But when you're dealing with sedimentary hosted orogenic systems, it's not unusual to find analogs around the world where these camps can eventually contain tens of millions of ounces when all is said and done. So once we actually have the time and capital to do some regional exploration, and we will, when the mine turns on and starts generating cash. In fact, we've done some pretty substantive prospecting work even over the course of the last few weeks and months, and some news on the regional exploration will be out imminently. Really, in our estimation, the most important part of this project is to take that expandable 1,000 ton a day operation and then prove that we're sitting on an orogenic gold mining camp, which really can have a world-class district scale potential when all is said and done. Now, I used to work for the controlling shareholder, a company called Wexford Capital. Wexford has backstopped or participated in US $55 million of financing to get us to the fully funded status that we are in right now. There was a US $20 million, it says here Canadian $27 million rights offering that was funded in July of last calendar year. That was the initial equity to build the mining project. In February, Wexford put in a US $15.15 million unsecured loan. And then that was going to be sufficient if everything worked perfectly to get us to first gold pour. Nicaragua happened to have been quite hard hit by the global pandemic. So there was in aggregate about a 4-month delay to the project. And for the first time ever, we're actually funding our project into commercial production, not just gold pour, first gold pour. So we have all the money that we need to continue our exploration program as it exists right now. We have all the money we need to update our resource. The good folks at Mine Development Associates are handling that right now. We have all the money that we need to handle corporate G&A and everything that it will take to get to commercial production in Q2 of next year and then some. So the last financing was a joint financing that was an underwritten transaction by an investment bank called Stifel. And between the Stifel and Wexford piece, we put in an additional net US $20 million. And that was, again, more than sufficient to go and get our mine into commercial production. So this asset, to put a stamp on this, is fully funded with no additional capital really ever needed to do any of our corporate objectives, whether it's to build that 500 ton per day mine, expand it to 1,000 tons a day, and thirdly, to eventually do the regional exploration to demonstrate that this truly is an orogenic gold mining camp. Now, since that financing, which closed a few weeks ago, we've expanded our share count to 655 million shares outstanding. Wexford, on an issued and outstanding basis, owns approximately 56% of the outstanding stock. On a fully diluted basis, they own 51.6% of the outstanding fully diluted shares. The second largest shareholder is a guy named Paul Stevens. Paul is one of the most highly respected investors in the world, really in any industry, although he has been a participant in natural resources since the early 1980s. He founded an eponymously named investment bank called Robertson Stevens, which was sold to Bank of America. He's a very wealthy individual, and I really put his Rolodex against any individual in the world today for any investment purposes. So I view him as a mentor, and he's a really great second largest shareholder to have. I am the third largest shareholder of the company between the stock that I've owned. I've been out in the market buying about 8.5 million shares in the open market since I took over as CEO of the company early last year. And then with my options, I own just over 4% of the company personally. So we do have that Wexford unsecured facility at US $15.15 million. That is due in about 2.5 years. However, in February of next year, it goes from a very cheap loan facility of about 8%, but then once it's outstanding past February of next year, the interest rate on the loan goes from 8% to 10%, and Wexford would be entitled on a prorated basis to 500 ounces of gold per year. So for instance, if half the debt is repaid, they'd be entitled to 250 ounces. So based on where gold prices are, that actually becomes a very expensive facility if it's held past February. We've raised US $8 million more than we need if everything works perfectly between now and commercial production. So part of that financing that we did on the equity side can be used for debt repayment, but investors should expect management to have every incentive to refinance that debt prior to February of next year, when the ratchet of that interest rates goes from cheap to expensive. Now, we also put out our materials for our annual general meeting. One of the key, and I would posit controversial elements of that AGM is to do a reverse split in the amount of 1 share for 20 that's currently owned. So the share structure is going to be tightened up quite a bit. We are only going to be doing this in conjunction with an uplisting from initially the TSX Venture Exchange to the Toronto Stock Exchange proper. The earliest that we'll be able to do that is late November, and it's probably going to be after that. So in conjunction with that uplisting, we will reduce our share count from 1 to 20. The fully diluted market cap of the company will stay the same. Options will be adjusted on a 1 for 20 basis. So nothing from a valuation perspective will change at all from the company. But there really is a singular reason why we are doing this, is that let's leave aside the operations and our ability to execute on what we're doing with our three-stage plan over in northern Nicaragua, and let's just focus on the stock. If there is a singular thing that a management of a junior mining company can do to enhance the valuation and performance and the underlying liquidity of the stock, is to eventually be included in an index. So in our case, the applicable large index will be the GDXJ. In order for us to achieve that, we do need, there's probably about 7 or 8 quantitative parameters that we actually need to qualify. The hardest one for us to qualify is to have an average of US $1 million of daily trading volume to do that. I don't see how it's possible to do that without initially uplisting our stock, being able to get more institutional coverage on our name. So I think that that Stifel transaction went a long way. In fact, you can see the dollar volume of our stock has risen more than tenfold since I took over, but it's still only about 40% of what we need for index inclusion. The ability to add, the ability to margin the shares, that will add incremental liquidity and buying support. So I'm convinced that this will incrementally enhance the liquidity of our underlying stock once we do the uplisting to the TSX, and then it puts us into a much more higher probability situation for us to start knocking and checking off the boxes of the 7 or 8 quantitative parameters that the GDXJ requires. To me, a stock split is a stock split. It's the same company before and after, but because of these incrementally positive attributes that come after this, it's actually quite an essential thing for the company to do. So to put this in perspective, we spent about a year's worth of marketing to do a financing through Stifel GMP. We were able to access US $8 million of outside capital, so outside the Wexford Capital Group. If we were added to the GDXJ today, based on our current market cap, that would basically mean a single investor outside of Wexford Capital, the Van Eck Group, would be required to invest $25 to $30 million US into us. So about 3 times the amount of capital that we were able to attract through a syndicated banking deal. And that number will increase the higher our stock price goes, because it is a market cap weighted index for all intents and purposes. So a little bit about us and our operating team. I've given over a little bit of the background from where I am. I come from the financial industry side, so I've worked for a couple of different mining-focused private equity funds. I am a chemical engineer by training. The key operating team is run by Jesse Munoz, our chief operating officer. I've worked with Jesse for over 13 years now. He and his family used to own and operate a full-service engineering, procurement, and construction management firm. We've onboarded all his employees to be the key operating team that we have over at Mako. Everything from metallurgists to mine engineers to project geologists all came from Jesse's family-owned business that, again, we've all onboarded. He has built no less than 10 mines in the Americas over the course of the last 15 or 20 years, inclusive of building mines in Central America, in all of Costa Rica, Panama, and Nicaragua as well. So direct on-the-ground experience, and he's been fantastic to work for over a dozen years now. Now, one of the reasons why I took over as full-time CEO in August of last year, in fact, I'm about to celebrate my 1-year anniversary on that, and then initially as interim CEO back in March of last year, were the results that were coming out of the ground. For those that are familiar with junior gold mining, I would put these exploration results up against any mining company in the world today. And then when you factor into the equation that these are all open pitable intercepts that we have on our drilling results over here. You can see on July 20th, where we hit 21 grams over 4.5 meters estimated true width. That was situated outside of our PEA limits. And even though that was one of the deepest holes that we drilled, again, one of the deepest holes that we drilled, that was only about 70 or 80 meters from surface. But you can see some of the other intercepts that we had over here. May 6, 2020, where we hit 1 ounce material, 30 gram material. That gold is worth today about $2,000 per ton material, sitting 2 meters from surface, over 4.2 meters true width. That is an area that we can be mining today. In fact, we've started to mine this deposit in one form or another since late February, and we've been mining the high grade, albeit still needs to be ramped up to our 500 ton per day commercial production numbers. We have been mining the high grade of this deposit for no less than 6 weeks, and everything that we see about the grade, it is outperforming what we've delineated in the 2015 resource. And then when we put out the update sometime in early September, it is going to confirm that these results, that this will in fact be the highest grade open pit only mine in the world, bar none. And you can see some of the other exploration results that we have over here. One of my favorite anecdotes about the company, there's a long winding history that I'm not going to go into as part of this presentation, but it took a while for Mako to be created in the form that it is right now. And it's not a secret that I disagreed with the former management team over at Mako. One of my favorite anecdotes, remember, we have the San Albino mine and then the exploration asset called Las Conchitas. So when I took over initially as interim CEO, in March of last year, about a year and a half ago, I was going over with the project geologist some of the historical drill holes that were put in. And we were going over this hole named LC, so LC for Las Conchitas, so that's the discovery asset with no resource that's been delineated today. LC11, so it's Las Conchitas in 2011 -01, literally the first hole that was ever put into the exploration asset, wound up hitting 60-gram material over 3 meters, 2-ounce material over 3 meters, and I think it was only about 30 meters from surface. The next time that hole was followed up on was about 12 hours after I took over as interim CEO back in March. And then 2 months later, the drill hole came back, and you can see at the bottom of your screen, it hit 377 grams over a meter, situated about 25 meters from surface. The previous management of this company refused to invest in anything that wasn't associated with getting the initial small-scale mining project up and running. I think principally because they wanted to tell their friends that they had a producing mine, and they were missing the forest through the trees. If anything, on the 3 objectives that this company is trying to do, build the 500 ton per day mine, expand it to 1,000 tons a day, and then prove that this is an orogenic gold mining camp, that mine is probably the least important of those 3. And one of the things that fell through the cracks were very easy, accretive exploration programs that can be done in a reasonable and prudent fashion. We're not going crazy with our exploration program right now over at Las Conchitas. We have a single rig going on right now. But if there is low-hanging fruit, we will go and pick it. And we've always had the capital to do that, whether it's from Wexford's backing. And then last month, there was a major transition in this company where we were finally able to attract third-party capital. So between Wexford and now through the general marketplace, we have all of the opportunities to invest in anything that is prudent to invest in. So a little bit about the asset that we have over at San Albino, and why does the highest grade open pit only mine in the world exist today? The last time that this mine was put into commercial production was in 1926. So a U.S. businessman tried to get the mine up and running. His name is Charles Butters, and he hired a local guy from the Segoviana mountains to be his accountant and general manager at the mine. 6 months into the mine's operation, his accountant and general manager hijacked the mine, stole all the gold, and then used it to fund the original Nicaraguan revolution against the U.S. Marine occupation that happened between the 19-teens to eventually when they left in 1933. And his name was Augusto Sandino, Sandino being the namesake of the Sandinistas. So the civil war that happened in the late 70s and early 1980s between the Sandinistas and the Somozas and the Sandinistas and the Contras that were funded by the United States government was not coming from a guy named Sandino in the 1970s. It was all coming from our former general manager and an accountant at the original San Albino mine. And because of the revolution, and the ruling party is the FSLN, the S stands for Sandinista. Daniel Ortega, a current Sandinista, is the president of the country. Sandino, when he was assassinated in 1933 by the new Somoza regime, became a folk hero within Nicaragua. So you fly down to Managua, it's the General Augusto Sandino International Airport. everybody, whether you're left, right, Protestant, Catholic, everybody is super excited that this mine is up and running because it's a very important social and cultural event for the country to have effectively Sandino's namesake to be restarted. So we've gotten a lot of support from the government to make sure that our path to getting into this production was maintained. Now, Nicaragua in general, it's a very safe jurisdiction. We used to operate a mine in Mexico, which was not a safe jurisdiction to both the project and personnel over there. Nicaragua, you can walk around late at night, it's fine. And Nicaragua has been hit hard by the virus. And in fact, like the borders to people have effectively been closed for almost 3 months right now. We have a little operation to try to get some of our key operating guys into the country at the government's permission on a private charter this weekend. Hopefully that will work. But even without any major improvements to the situation over Nicaragua, we're very comfortable with our current schedule of getting first gold pour in January and then commercial production in early Q2. And if our key operating team is able to get in and out of the country again, hopefully they will be, then fantastic. There may even be some improvements to that schedule. The tax regime is fine. It's normal. I don't think it's too high. I don't think it's too low. 30% corporate tax rate, 3% royalty to the government. Now, 2015 resource and PEA. So probably, and I just want to highlight a few elements over here. So let's start talking about the CapEx. So I mentioned that we raised US $55 million to build our mining project. That was $8 million more than what we needed, right? So now you're at $47 million. And then an astute investor would say, all right, you raised $47 million. It says over here $21 million. What exactly is the difference? Were you guys over budget by more than 2x? The answer is we were over a budget by a little bit, mostly due to the pandemic, but by and large, it had to do with scope changes, funding exploration programs, and then also general corporate G&A. So the first thing about the project itself, there were a few material scope changes to the project, mostly associated with our tailings management facility, which we've upgraded to make it top of the line from an environmental safety and security perspective. On an apples to apples basis, that took the number to about $25.5 million of direct capital going in to the project itself. On top of that, it was clear that we needed to have an infill program over at San Albino because the resource that delineated these numbers was just not nearly drilled out enough, especially with the type of deposit that we have. So we initially commissioned an 8,000 meter infill program that expanded to over 25,000 meters. So that program in itself cost us nearly $5 million to do. So now you're at about $30 million of cost. We were also, like I said, more than willing to finance regional exploration for low-hanging fruit. So that program that we started early last year, going through to early Q2 over at Las Conchitas and some of the regional work that we're doing right now, inclusive of the resource update over at San Albino, will add another $4.5 million to our costs. So now we're at $35 million. On top of that, when we were shutting down our mine in Mexico, we had to make a payment to our mining contractor as part of a settlement in the amount of $5 million, $4 million last year, and $1 million that we're going to be paying in 2 months. So now you're at about $40 million all in. Then on top of that, we had to fund G&A, not even so much for salaries. I get paid $170,000 a year, but salaries for everybody, for our offices in Nicaragua and in Mexico, United States. That in aggregate for a 1.5 year period was another $2.5 to $3 million. Now we're at about 43. And then on top of that, we had some overruns associated with the global pandemic. And frankly, our guys, our local contractors, our operating team handled what was a very, very challenging situation extraordinarily well. So I'm ecstatic that we were able to deliver everything that we needed to deliver and very comfortable on our current schedule, given the challenges of operating in a very hard-hit jurisdiction where effectively the borders have been closed right in the meat of when we were building and operating this mine. So as an investor, I always get really, really confused and upset when you see numbers like 21 million and then all of a sudden it blows out to 47. But that is the reason why it happened. Now let's take a look at some of the numbers associated with the resource itself. So indicated and inferred. I want to highlight the indicated. Most of that is in pit, but not all. That showed 7 grams. In fact, if you actually took a diluted grade in the open pit that the 2015 resource estimate was, it was close to 6 gram material. Now keep that number in your mind. The open pit grade of this deposit was 6 grams. You're going to be running that through a 500 ton per day operation that equated to like a mid 30,000 ounce a year run rate. When you factor into the underground, again, it came to an average of about 41,000. That resource, I'm glad to save this to the Q&A if anybody has any technical questions on it. But basically what they did is that the geology was such where we had a very defined vein, super high grade vein. And then you had a zone in and around the high grade vein that was geochemically distinct, and you basically had this wider zone. What the former estimator was doing was basically taking this entire zone, averaging the high grade and the low grade, and basically taking this bulk mine and then delivering it at what effectively was a much lower grade and much higher tonnage deposit than what reality is. We are going to be mining this on a surgical basis, and glad to go over some of the technical details on that. But effectively, we're going to be just peeling away layers of this layer cake and exposing the frosting, that vein, such that the grade of the deposit is going to be materially higher than 6 grams going to the head grade. The head grade of the mill. So I'm going to be reporting our first mining results and bench reconciliation over the course of the next month. And you're going to see that this deposit ain't no 6 gram deposit, which is extremely high for an open pit mine. In fact, even that number puts it at the upper echelons of grade with respect to open pit. We are going to be materially above that. However, because we're not doing a bulk zone, we're doing a much more selected zone, the tons of the deposit are going to go way down, way down. In fact, all of the infill work that we've been doing has been focused within that pit area. So expect grade to go up, certainly tons to go way down, and probably because the previous estimator were taking some liberties that our new, shall we say, more professional group is doing, the stricter parameters will also likely reduce the ounces to a certain extent in pit and certainly underground. So again, to take home from this, higher grade, we will get this up to 500 tons a day, which means we are going to be generating more production at the end of the day, higher grade, and certainly a higher profitability when it comes to the mine itself. That resource update will be out this quarter, most likely in the first or second week of September, and I look forward to answering any questions that may come once that report is out. So just to go over high grade relative to some of our peers, these are very large mines. So I don't want to confuse. San Albino is a small mine, especially in the 500 ton per day context, expanding to 1,000 tons a day later on. So these are large operations. But you can see when you're dealing with open pit only mines around the world, you're talking about some of the highest ones are going to be substantially less than what we are going to be mining. When we say we are going to be the highest grade open pit only pit mine in the world, we mean that we are going to be the highest grade open pit only mine in the world. Again, an area that we've started to mine already at the high grade over the course of the last 5 or 6 weeks. First gold pour in January, and then commercial production in early Q2. Now, that is only a small part of our operations. The San Albino deposit, that mine that we're starting to mine right now, is in that yellow square, that arrow that says San Albino deposit. But that is a very small 3.5 square kilometer area on what is now a 200 square kilometer land package. Every single one of those stars that you see are samples that are grading in excess of a gram material. In fact, some of those stars over there are grading in excess of 100 gram material on samples. Over the course of the next few weeks, I'm going to be putting out the initial exploration and prospecting over at Potrerillos, that green polygon that you see over there. We've taken some samples over at site. There is no question that the San Albino vein continues along strike in the direction of the text, such that we do have 23 kilometers of effectively untested strike. It's not to say that we have a 23-kilometer wide mine, but there is a high degree of probability that we're going to find additional economic deposits along strike to San Albino, not just with Las Conchitas to the south, but on a fairly consistent basis across the entirety of this 23-kilometer untested strike zone that we have at the mine. I just want to hit home that this 500 ton per day initial project is but one of three pieces, and in our minds, probably the least important of the three pieces in terms of what makes up the value of what we see over at Mako. Now, as the crow flies, this is how the next 2.5 years are working. The plant that we're about 85% done building right now. In fact, the plant is probably close to 90% done. We're about 45% done of our tailings facility. So the bulk of the remainder of this year is going to be focused on finishing off the dry stack tailings storage facility. All of that plant and equipment is built up on the upper right part of this yellow inner square on the left side of the river, albeit on a 35 meter platform. So you don't have to worry about the river overflowing. Now, all of our equipment that's being built right now can be expanded to 1,000 tons a day pretty easily. Our crusher can easily handle 1,500 tons a day. Based on our expectations for residence time on the ore, we need 5 leach tanks to handle 500 tons per day of an operation. We have poured the foundations for 10 leach tanks. We've only built 5 leach tanks, but we poured the foundations for the rest. So all we have to do is build another 5 tanks to expand to 1,000 tons a day. Our filter press that's being assembled right now in Michigan in the United States, it's about 90% done and complete, can handle 1,000 tons a day with minor modifications. We're building our refinery right now over at site. We're mostly finished with that. With some minor modifications that can wind up running at 1,000 tons a day as well. We'll need to build additional tailings capacity, so that will be some capital. We'll probably need to have additional gen sets for additional energy requirements at 1,000 tons a day. But for very, very high single digit, maybe low double digit $1 million of PP&E capital, we'll be able to expand this to 1,000 tons a day. Likewise, Las Conchitas, as the crow flies a couple kilometers to the south of the southern part of San Albino, we're exploring for gold right now in the southern part of the Las Conchitas area. No question in our mind, that's a second deposit. We will have the ability to go and mine that at 1,000 tons a day, integrated Las Conchitas and San Albino in late 2022. So again, on this particular area, again, we're building the 500 ton per day mine up at the orange area, Las Conchitas over at the purple. Once we drill out Las Conchitas, in our estimation, 50 to 75,000 meters will be sufficient to get an initial mineable resource over at Las Conchitas, so probably another $10 million of exploration capital. So between that and the PP&E capital that we'll take for the plant, so somewhere in the neighborhood of about US $25 million, we'll be able to expand to 1,000 tons a day. Easily can be funded with probably about 6 months worth of cash flow from the mine itself, let alone the 2.5 year or the 2 years of production that we'll have in front of us. So when we say we're fully funded, we are not just fully funded to get to commercial production in early Q2 of next year. We're fully funded to expand to 1,000 tons a day, and we're fully funded to do the regional exploration, what we think is the most important part of the asset, to go and do an appropriate level of exploration and eventually drilling on the full 200 square kilometers of ground that we have. Las Conchitas, if anything, has higher grades than what we have over at San Albino. And it's just a question about knocking off the geological model and then infilling it into a mineable resource. And then, as Bob's your uncle, it will be part of an integrated 1,000 ton a day mine plan starting in about 2.5 years from now. You can go into the next slide. The reason why we have the highest grade open pit only mine in the world is not because the geology that we have is all that unique. I can name probably 5, 10 different narrow vein quartz hosted sedimentary hosted orogenic gold mining projects around the world. And in fact, a lot of them have higher grades than what we have. What makes this unique is that the structures, which normally in those analogs around the world, they tend to be vertical in nature. Ours happens to be tilted on its side, where the dip of the veins are anywhere from 0 to 30 degrees. So if these were vertical vein structures, it would make for great underground mining. You'll have to put in hundreds of millions of dollars of infrastructure, if not $1 billion of infrastructure, to go and access these high-grade veins. But because ours happen to be tilted on its side, almost horizontal in nature, we have the ability to open this up as an open pit. And as I described, even with the COVID-related delays and overruns for everything, inclusive of corporate G&A, it took approximately US $42 million to get to commercial production, and that was including an exploration program. So that number on an honest basis was really more like $37 million to get the mine, plant, infill program, everything up and running, where instead of spending hundreds of millions of dollars, we'll be able to get an initial starter mine up and running for $37 million, and then generating a multiple of at least more than that, more than 1x that in terms of free cash flow per year, based on the grades that we're expecting coming from the mine. So with that, glad to open up the floor to any questions. I know some have submitted it previously, so Deb can go over that. But anybody that has any further questions, by all means, I'll be available to answer any questions you may have.
So the first questions that we had, I'll start with the audience questions, then we can revert to the ones that were sent before. So we had a question from an audience member. This is to be an open pit mine, correct? And at the 500 ton per day or production level, what's the expected strip ratio? I'm not sure if you covered that in the presentation.
Sure. It depends where we are on the deposit itself. So our overall strip ratio in aggregate for the initial mine plan will be in the mid to high teens, but in the early years it would actually be single digit. In fact, where we are on, if you can see all the way on the left of this modified long section that you can see over here, the 500 ton per day operation over at San Albino are the first 4 veins that you see there. The 4th vein, Aras, so the 4th from the left, in the first couple of years of operations over at Aras, you're talking about a strip ratio of less than 3 to 1 in that zone. Over at San Albino, we're actually doing quite a lot of waste mining right now, so that's part of the pre-strip exercise. In the first couple of years, we'll be right around double digit, and then for life of mine, it will be into the mid to high teens when all is said and done. Now, this is actually an important point over here. I had a long chat with Mine Development Associates this morning about it. Is that when people hear the number mid to high teen strip ratio, they say, "Whoa, that's a high strip ratio mine," but it all comes back to the grade of the deposit. So let's go over some of the math associated with this. Our mining costs, our direct marginal mining costs, are less than US $2 a ton. Fully burdened, everything, explosives, G&A, everything that comes with it is running about US $2.60 a ton. And that's coming not from a model, not from a spreadsheet, that's coming from a contractor that's invoicing us on a bi-weekly basis right now. At $2.60, if this was going to be a 10 to 1 strip ratio mine, maybe even slightly higher than 10 to 1 strip ratio mine, that means that this is going to be $30 a ton to mine a ton of quote unquote ore. If we are talking about diluted grades that are being going to the mill, net of recovery, that will be in the high single digit range, that means the value of that rock, even at that double digit strip ratio, will be approaching $500 a ton. So even with in people's minds, that high strip ratio, the mining costs of this are a tiny component of the overall costs of our mine. In fact, even if this was a 30, 40, 50 to 1 strip ratio mine, which is not going to be, but even if it was, the percentage of cost attributable to mining will still be very low because of the grades that we happen to have in what will be the highest grade open pit only mine in the world.
And Akiba, can you tell us what gold price you're using for your estimates?
Still a TBD, but I'll give you some of the thought process behind it. This will be a resource estimate. This is not going to be an updated economic study. When you're dealing with a resource estimate, the most important thing is to make sure that the geology is well understood and to see what the potential for economic viability will be from that resource. In doing that, you don't want to miss some geological features, forget about ounces, but geological features and how things can potentially come together in an economic study because of what effectively is an arbitrary decision to use a gold price. So when you're coming out with a resource, it's actually quite important to make sure that you're capturing everything, and then you can start applying some more conservative economic constraints around this. So the thought process would be, we'll probably run the model at various gold prices. We happen, in my mind, I haven't actually seen some of the whittle runs that we're expecting to run, but what we'll do is we'll run it at various gold prices. If there happens to be a particular breakpoint of gold prices that all of a sudden captures a geological feature that we weren't capturing at a lower gold price, we'll use that higher price. However, based on how I see this being modeled out, I don't actually see there being all that much of a singular gold price that's going to cause a major change in the resource, in which case there's really no reason for us to use an absurdly high number. But the thought process is to make sure that we're not restricting our ability to incorporate geological features because of the price of gold that we're going to be using. But in all honesty, we haven't decided on what that number is just yet.
And what is the life of mine at this point in planning?
So obviously the resource is going to be determined about how we're remodeling this. In terms of what P&E did, so the 2015 resource estimate, there was a somewhere in the neighborhood of between a 5 and 6 year open pit that transitioned into an underground later in the mine life. From our perspective, we'll see where the numbers lie, but I don't expect there to be a major change in how long live the open pit part of this will be. That being said, San Albino is but a small component to what we actually know about, which is Las Conchitas. No question in our mind, it's going to be a second deposit. And then more importantly, along the 23 kilometers of untested strike, we are convinced that there's a high probability of finding additional economic near surface open pitable deposits on the rest of our 200 square kilometer land package.
And is the assay lab operational at this time? If not, when do you expect to be fully operational?
It's a good question. Actually, this is kind of an important. Apologies for my kids over there. So, because of the nature of our grade control program, right? It is essential that, and I'll even go over this because it's kind of illustrative for how detailed this is. In order for us to make a decision to open up a mining bench and understand where the geology is, we start obviously with the resource estimate. So these are drill holes that we get back from an external lab, and that's kind of how the resource update is. With that, when the guys are putting down blast holes for the explosives on our mine, we'll put some blast holes, and we'll actually take grade samples along the lines from that. And then those grade samples themselves will be used to understand kind of where the geology starts. So we'll be able to open up the mining bench. Now, the thing about our deposit is those blast holes are actually not very good indicators of what the real grade of the deposit is. So once we open up the bench and our geologists can see the vein itself, we'll sample with the saw right along the lines of the vein itself. And from that, we'll have a fairly accurate assessment of grade, at least in situ on the vein. Then we're going to be mining it. So there's going to be at least a little bit of dilution to it. So all of that's going to be stockpiled, eventually run through the mill. And then we're going to have a sampler right on the crusher that once the material is crushed, we'll take a little scoop every 5 or 10 minutes or so, and then measure the grade over there. So if you think about that, over at the production level, so leaving aside the resource estimate, which is going to an external lab, you'll have 3 separate groups of samples that you need, all of which need to kind of be given back to the operators within 1 or 2 days. It is absolutely essential for us to have a functional production-worthy laboratory on site in order for us to be operating at 500 tons a day. So that's a long-winded way of saying our lab is not yet fully certified and operational. So what we've been doing over the course of the last 6 weeks is we've been taking the blast holes and the channel samples and spot samples from the stockpile to an external lab. And instead of getting a 1 or 2 day turnaround, we actually have a 6 or 7 week turnaround time, which is one of the reasons why we're not mining anywhere near 500 tons a day right now, because we don't have everything set over at our operations. Based on our last schedule, we actually had a little bit of delay because we used some lead chemicals. So we do need to have some blood tests to make sure that nobody has elevated heavy metal exposure in the lab. So it was a multi-week exercise in order for us to get a Nicaraguan doctor to take some blood samples that could be processed. And then finally, I think within the next 2, maybe 3 weeks, we're going to have a functional production lab. And then as soon as that happens, you'll be surprised at how quick the ramp up will be from the, let's call it sub 100 ton a day of ore mining that we're doing right now, to eventually having a nice glide path to getting to 500 tons a day sometime prior to commercial production in Q2 of next year. So month of August is our expectation, but it is an absolute essential component to delivering this mine in a commercial fashion.
Okay, thanks, Akiba. So moving on, I know you covered it earlier in the presentation, but in case people are just tuning in for the questions, can you talk a bit about the consolidation? What are the benefits? What's the timeline? And just a bit of your thoughts on the whole process.
Sure. Timeline will be in conjunction with an uplisting to the Toronto Stock Exchange, so the big board up in Canada. Based on the feedback that we have from the exchange, they want to see a healthy balance sheet and an 18-month capital budget that's fundable, which we have right now. However, because the financing closed in July and not June, it was expected to close in July. That's not a delay, but it happens to have closed in early Q3. That means the exchange needs to review Q3 financials for them to approve the uplisting. The earliest that our Q3 financials will be out will be late November. So at the earliest, it will be very, very late November. And then I can't imagine that it will happen like immediately after that. So let's call it December, January is kind of a reasonable target for the uplisting and the consolidation timing wise. Now, the rationale is actually quite simple, right? So leaving aside execution on our 3 main projects, 500 tons a day, expand to 1,000 tons a day, prove that this is an orogenic gold mining camp. Leaving that aside, just focused on the stock itself, the primary objective of me as the management over here is to get us added to a index, right? So in order for us to be added to an index, especially the GDXJ, the main quantitative parameter that we need to meet is to have an average daily trading volume in excess of US $1 million per day. We're at about, even though we are 10 times the dollar trading volume that we were when I first took over last year, we're really only at about 40 or 50% of where we need to be. In order for us to get to that level, obviously it helps to have a higher valuation, number one, that helps. But we need to have all of the other additional attributes that add to the liquidity of the underlying name. Doing that Stiefel deal, bringing in institutional capital to the name, is going to be helpful. It has been helpful. Like after that financing happened, we've had an increase in our trading volume. The ability to introduce margin to the stock price. And when I think people are a little bit confused when I've mentioned this publicly about the importance of margin. It's not because I want our investors to take out a loan to go and buy more stock. What I mean is you actually have, whether it's high net worth portfolios or even small scale institutions, which require on basic marginal stock, you have the ability to increase your ownership in your portfolio. You have the ability to acquire shares of Mako without limiting your ability to invest in other mining companies. So it actually helps from a liquidity profile, even on the institutional side and on the crowd. You have the ability to eventually have options written against your stock, which further enhances liquidity. But I need to make sure that we're doing everything within our power to go and check the boxes of what we need to do for eventual index inclusion. And certainly there's some qualitative reasons why I think having a quote unquote penny stock is probably giving a bad sense of what Mako is right now. We're a mining company. We've started to mine the high grade. I don't like having a 50-cent Canadian stock. I think that actually has an image that I don't really want to convey. But the vast majority of the rationale for us doing this is to help push the scales over to achieving those quantitative parameters for eventual index inclusion, the most likely being the GDXJ.
Okay. And then actually, Akiba, because we did have some questions before just about the whole dynamics and what happens with share price when there's a consolidation. I know it's pretty generic and basic, but I think there's some shareholders that haven't gone through this process. If you want to break it down into logistics.
Oh, the logistics is that I obviously check with your broker, but this is I've never seen a situation where it's not automatic. So let's say if you have 100 shares of Mako right now, you'll have 5, right? At the end of the day. So for every 20 shares that you'll have 1. For people that are concerned that we're trying to do some funny business around options over here, the option strikes, first of all, the options amount are going to be reduced by a factor of 20, and the option strike price are going to be increased by a factor of 20. There's not going to be any pecuniary reasons why management is doing this. The qualitative things that and critiques that we've had is that whenever you do a share consolidation, the stock goes down, is, for lack of a better word, BS, right? I think people confuse what happens after share consolidation because of survivorship bias, is that the vast majority of companies that go through share consolidations happen because their stocks were going down. So the subset of companies that go through share consolidations happen to be weighted towards the crappy ones, which is the reason why there's a correlation between having share prices go down after a share consolidation. For those companies that have done share consolidations in conjunction with an uplisting, or something along those lines for some sort of positive reason, whether they were migrating to a different exchange, or just because of some sort of like M&A, positively viewed M&A situation, they tend to actually do better. So I think people do need to separate what a survivorship bias view is of share consolidation from the actual reality. But leaving aside this, there are very real technical reasons. And by technical reasons, I don't mean the chart. I mean technical reasons in terms of how the stock will trade and how our investors have the ability to deploy capital, which are going to be very different and beneficial to the company after this is done in conjunction with a TSX uplisting, which will happen at the very earliest, late November of this year.
Okay, and then one more question sort of on structure and the recent financing, which is, will the recent funding pay out the Wexford loan before the penalty is activated?
Yeah, I'm sorry. Yes, I understand the question. We raised based on a perfect modeling, so making sure everything goes perfectly from now until commercial production, about US $8 million more than what we need to get to commercial production, not first gold pour in January, but commercial production in early Q2. So and what we told the market is that US $5 million will be allocated towards principal repayment, certainly sometime before the February ratchet. And then if everything still goes perfectly, like this is a mine, so it rarely does, but assuming everything does continue to go according to plan, there'll be as much as US $8 million for principal repayment. And for those that are good at math, US 8 is certainly less than US 15.15 million. So at the very least, we are going to attempt to refinance the rest of the debt prior to that ratchet. But there will certainly not need to be any additional incremental capital for us to get to first gold pour in January and commercial production in early Q2.
Okay. And we have a number of questions on the 23-kilometer strike and the property. Let me run through them. I think they all kind of tie in together. So are there any artisanal or community mining happening on the site? I know other mines in Nicaragua have had to make arrangements with these local miners.
Yes. So we acquired, you can go, I guess, 2 slides prior to this, if you're still sharing your screen.
I will share it in a second. Just give me 1 second.
I guess it would be what? I guess 14 maybe, somewhere around there.
You talk there.
So we acquired the Potrerillos property in that one. We acquired the Potrerillos property in December. Now I took over as interim CEO in March. And again, many things that the previous management team weren't focused on. Potrerillos was an absolutely essential piece of property for us to get. We're going to be putting out over the course of certainly this calendar month in August, our first exploration results, not drilling results. We don't have a drill program going on in Potrerillos, but from a sampling results that we're trying to get back from the lab over at Potrerillos. And it shows that this is directly on strike to San Albino with grades like you would expect on the rest of the property itself. Now, we acquired that in December. I took over in March. I knew this was essential even before me taking over in March. And then obviously previous management team did not want to spend money on anything that wasn't associated with getting that initial small scale mining project up and running. Now, the reason why we acquired this in December and not March is because the former owner of this ground just let artisanals run rampant. I think when I was down in Nicaragua and I saw some of those trucks coming off the ground, I think there was at least 40 of them thereabouts. And then as soon as they went away, I guess they didn't have access to relatively deep pits, and by relatively deep I mean deeper than 3 or 4 meters from surface, so kind of like a nothing burger in terms of the resource that they took out when they went away. Made a deal with Condor and acquired that ground as soon as we were comfortable. I did not want to have any like social issues with artisanal miners while we're in the middle of building a mine. We we had a little discussion with, so, and by the way, in Nicaragua, as part of the social compact, you're required to give 1% of your prospective mining claims to the artisanal community, provided that the artisanal community are registered with the government and no mechanized equipment is used. So these 40 or so artisanal miners were using illegal equipment. And I didn't want to start a kerfuffle, and it frankly wasn't even our ground. The registered artisanal miners are great. We talk to them all the time. They obviously are only doing super shallow stuff, super high grade, narrow vein type mining. So we ask them what's productive veins for them, and we actually get some good geological advice from them. To the extent that there are illegal miners on site, the government is actually very responsive to that. So we've had people operating about 20 kilometers away from our mine in the upper right portion of the Mura concession, so on where the arrowhead basically is, the government came and impounded the excavators that they were using. They're still on site, so the government takes that seriously. The main difference between artisanal miners in Nicaragua and in Mexico is that if you upset some artisanal miners in Nicaragua, the worst we've ever seen them do was light a trash can on fire. In Mexico, they'll come armed with AK-47s. In fact, our main security issues over in Mexico was not associated with the cartel. It was associated with heavily armed artisanal miners over there. You do not experience that in Nicaragua. They're fairly normal and easy to deal with, even though you do need to be cautious to make sure that everybody is operating on the same social contract here.
Further to that, is criminality a problem? Are there lots of gangs? Is being near the Honduran border an issue?
No, we haven't had any gang-related activity, certainly by us. I mean, even Nicaragua as a country, it's statistically the safest Central American country, inclusive of Costa Rica. I think the murder rate is 8 or 9 per 100,000 people, which is, I think, a 10th or 15th of Honduras. So it's like, you go across the border, it's night and day in terms of gang activity. We've had actually, as part of the Potrerillos group of artisanal miners, it did look like the local ringleader was hiring some Honduran day laborers to do the mining for them. But it certainly was not on the violent side. It was really more just an operational issue. I'm not sure I actually have a real good handle on why Nicaragua has been so safe. I think for whatever reason, Ortega has taken an approach not to have the country be used as a major conduit for drugs. So I mean, you should be given credit for that. But Nicaragua, at least when it comes to organized crime, is it's night and day to operating in Mexico, which I have experience in. And then I would imagine it's a similar situation to Mexico and Guatemala and Honduras.
And just talking about the potential of the entire land package, we had some questions about how far San Albino is from Mura, which you can see on the map is probably 20 kilometers as the crow flies, and why you're so confident that there's potential deposits all along strike. And I know that I can speak to it the first time that I went to site 3 years ago almost, up here, just off the property, there was artisanal mining at surface of high-grade veins that we went and saw on I think it was a farmer's land. But yeah, I mean, it outcrops, which is really interesting. But I'll let you answer, Akiba.
Yeah, first of all, there's no question that gold mineralization goes off our property in either direction, to the southwest and the northeast, where Deb just circled. Day-to-day, you don't know until you know whether you have an economic deposit. You got to drill it out and prove it out. But every single one of those samples are high-grade samples that we've taken from surface. We actually kind of live in the best of both worlds, in that the veins do come very close to surface, but there's very, very little outcrop on the property. I think what Deb was highlighting was an exposure where somebody actually dug a few meters from surface and exposed the vein, but there's actually very little direct virgin outcrop on the ground. And that becomes important, is that if there was actually outcrop elsewhere on the ground, this would have been mined out a long time ago. But the fact that the veins come so close to surface is that geochemistry is a very powerful tool for exploration over here. So the only two areas that have had like a real geochemical survey have been over at San Albino and Las Conchitas. And there's a reason why we have a 90+% hit rate on our drill programs, because you start with the prospecting, then you do a fairly detailed geochemical survey that will have some hot spots on gold and some other trace elements at surface. You'll expose the vein by opening up a trench that will expose the vein that's sitting anywhere from 1 to 3 meters from surface, so close to surface, but very rarely outcropping. And then once you have some idea on the orientation of the vein, you just drill it at depth, and we basically have a 90% hit rate doing that. I would expect that once we have the time, it's not even so much a capital issue, it's really more of a manpower issue, the ability to do a detailed geochemical survey on the rest of the property, that there will be additional hotspots of gold and other trace elements that we'll be able to expose through trenching, because there are some certainly historical prospects and artisanal workings all over the property. And once we'll expose that, we'll be able to orient the veins and drill underneath and hit the vein. And if you get enough hits in a concentrated enough area, then you'll have additional economic deposits. But there's certainly no geological reason why there wouldn't exist other economic deposits. We're highly confident that there will be as well. But as with anything on exploration, you don't know until you know.
So currently the focus is on getting San Albino into production and getting a maiden resource on Las Conchitas, which is here to the south. How would you prioritize the other targets, potential targets?
So Potrerillos, we took a survey sample on. We've gotten the majority of those samples back from the lab. So sometime this month, we'll release what those data say, and it's clear that Potrerillos not only is on strike to San Albino going to the southwest to the northeast. There are prospects on the concession that we own in 2018, the red that continues. I mean, the first prospect that we have right over where it says De in the De Oro gold belt. I mean, there was a 130 gram sample, like right there. And it's like on Potrerillos as well, high grades, and then San Albino is the mine. So there's no question that this thing continues over a multi-kilometer length. To put that in perspective, the actual strike of the San Albino deposit is only about 300 meters right now. So it's tiny. It's tiny. The strike that we have in terms of prospecting, and I'll go over Las Conchitas in a second, but the strike that we have in terms of prospecting is well in excess of 5 kilometers of kind of linked up prospects over here. So that's nearly 20 times as big as what we have. Again, it's not to say the same that we have like 20 times as big of a mine, but there is 20 times the strike potential that we have just on the prospecting that we have. Over at Las Conchitas, we've started to take the drill holes that we've put into a three-dimensional model. I have no doubt that at least the strike length potential over at Las Conchitas is 3 to 5 times that of San Albino at a minimum. So one of my biggest fears when this resource was going to come out, and frankly even building a 500 ton per day mine, is that people tend to focus on what you're focused on. If you're doing something, if you're delineating something, if you're building something, that's kind of the myopic view, is to only look at what you're working on at that point in time. For us, of the 3 main objectives that we have, build a 500 ton per day San Albino, expand this to 1,000 tons a day, including Las Conchitas, and the regional exploration, I truly believe that the mine, and again, the highest grade open pit only mine in the world, the mine is frankly the least important of the 3. So from a prioritization, we do need to get into cash flow before there's any real budget to do like a real infill program over at Las Conchitas, or to do some real exploratory drilling over at the regional targets. But we clearly are sampling over at Potrerillos, and we clearly are drilling on a greenfields basis over at Las Conchitas right now.
And just for clarity's sake, the plan to go from 500 tons today to 1,000 will include ore from Las Conchitas down here. And how far will you be trucking that?
Yeah, no question. I kind of alluded just about the level of the processes and procedures for us to do an effective grade control program. It's going to be, I can't even envision mining San Albino at more than 500 tons a day. So in order for us to mine at 1,000 tons a day, it will require a completely separate mine to do this. Even over at San Albino, we're going to need to have, at a minute, right now we're obviously only mining on one face right now. I think I got a flash report this morning where we mined 160 tons. So, and it's not all that consistent either. So we need to have a minimum of 3 faces. So triple the number of faces that we're mining right now. That eventually will come when we just open up the mine a little bit. But even then, in order for us to be mining at 1,000 tons a day, it's not just 3 faces on a single part of the mine. We need to have 2 separate mines doing this simultaneously. In terms of trucking, in order to link up Las Conchitas to the southern end of our haul road over at San Albino, require a 2-kilometer haul road. We have the surface rights; we own them right now. I think with very, very minor permits, we'll be able to build that. So that it's a capital item. That's part of the high single digit, low double digit PP&E budget that we would have to expand to 1,000 tons a day. So it's not including the drilling, which eventually, in aggregate, between the drilling and the PP&E, would probably require about US $25 million to do the expansion. But the haul road itself will be a minor component of that.
Okay, and then I have one more question on your whole land package, which is, can you describe the existing royalty streams on the property?
Sure. So to the government, there's 3% on everything, right? That's part of the non-deductible as well. So that's on every concession. For those that are familiar with the history of the predecessors of Mako and how we got there, there was a fairly encumbering royalty stream that was put on in 2014 on the primary project area over at San Albino that got restructured as part of the merger of the two predecessor companies to Mako, such that there's an additional 3% royalty on the San Albino Square, and then a 2% royalty on the rest of the red and yellow concessions that we have right now. So there's either a 3% royalty in green and magenta, I guess that's the color. There's a 5% royalty, so 3 plus 2 on the reds and yellows, and a 6% royalty on, I guess that's orange. I guess I did yellow twice. So yellow is the outside, and then orange is the San Albino. I think you guys understand what I'm saying.
Okay, I think that wraps up the questions specifically dealing with the land in Nicaragua. I had one question, if you could provide an update on La Trinidad and what's going on in Mexico.
Yeah, we effectively completed a reclamation. The last thing we need to do is just build a fence around the pit, which is take all of a few tens of thousands of dollars to do. But we need to wait until rainy season is complete. So we'll probably build that fence, late October, early November. The very little cost associated with that, so we were well under our budget that was on our last quarterly financials for that. There exists close to US $6 million of property tax payments that are on our balance sheet that we have no intent of paying. So our balance sheet has let's call it an enhanced liability that isn't really reflective of reality. Now, we've signed a non-binding letter of intent with another publicly traded company called GR Silver to acquire our Mexican operations. They have until the end of this calendar year to complete that transaction. I spoke with Marcio, or at least my colleague spoke with Marcio last week. So they're kind of dotting their T's. Hopefully they'll be able to work out a deal with the tax authorities about the $6 million of tax payments. So they'll probably reschedule those. So we're still on target to complete the sale of the Mexican operations. In terms of what it means to the company, the only thing that is, it will make our balance sheet look prettier. But for us, this has been, we've effectively, there's no positive or negative value associated with this going forward. We actually use a lot of the equipment from Mexico for Nicaragua. So we sent a lot of equipment down, principally on our lab, but even some of our main kit we were using from in Mexico. We completed the sale of our crushing equipment to another public company called Minera Alamos for I guess just under US $1 million, about Canadian 1.3. We sold this to them, so they made the last payment, albeit they haven't picked up the equipment yet. We're waiting for them to hire a truck to do that. And then there's our litigation with the insurance company continues. If anybody ever deals with Lloyd's of London or sees any of the members in person, please punch them in the face for me. I really think they're a piece of work. We actually had a fairly material win in one of our procedural elements in the Arizona courts, currently suing them for over $7 million in form of failure to pay an insurance claim from a hurricane that hit the mine in October of 2018. Hopefully we'll reach some sort of resolution in Arizona or Mexico to that. But frankly, the insurance company is taking a tax that I think is pretty ridiculous. So that continues, and then even after the sale of the property, that insurance claim will be for the benefit of Mako, not for GR Silver. That was part of the deal. Currently, that's held on our balance sheet at zero. So if we get a portion of that $7 million back, or even more with punitive damages, then that will be a net gain to the company.
Okay. And then I had a couple of remaining questions, which are more about shareholder base and structure of the company, et cetera. So in terms of institutions, I mean, we had a number of institutions come in on the last financing. What do you find is what is holding back investors from investing in Mako? What do you find the hurdles are?
Yeah, so I think firstly, I think it was the Wexford involvement, right? So it's kind of interesting. I was about to say I don't like to cast aspersions to Canadians, but I usually jokingly cast aspersions to Canadians all the time. but I would say that there is a fundamental difference in how private equity is viewed north of the border versus south. I think in the South, and I think Paul Stevens is a perfect example of the U.S. mindset, is one of the principal reasons why he's invested in Mako is because of me and Wexford, their backing. And that's why he's involved in some of our other portfolio companies as well. In Canada, and I think there's a whole host of psychological reasons why this is the case. And actually, frankly, even because of the piss poor performance of private equity in general in the mining sector up in Canada, is that there was a hesitation to invest. Now, through over a year-long effort on trying to prep the institutional market for this, I was able to get roughly $8 million of institutional capital as part of that raise. In all honesty, I think some of it had to do with the success over at Mako and what we were able to execute on. But I think a lot of that happened to have just been because of the gold tape. So there was a lot of companies, and I don't want to get into the who's got a better project or what, but I think there was unequivocally worse companies that were able to raise more money than Mako for all of the reasons that I mentioned in terms of the hesitation for people investing in private equity. And then part of it was structural in nature, is that because we're going through a resource update right now, I'm not prepared to sign a prospectus until that resource update comes out. So we actually had to do a private placement form of capital. I think if we actually did a freely trading piece of paper, we would have had 3 to 4 times the demand on the transaction itself. So I think Wexford is a component to it. There's a controlling shareholder. The fact that natural resource investors happen to be congregated in a region which thinks negatively of that. I think there are components to size. Like, I think there's been a trade going on that people want large resources. Sometimes the market likes small scale, high grade. Sometimes they like big resources. Depends on when they are. To me, I think one of my biggest communication strategies that I needed to achieve over the last year is just to get out of this mode of thinking that Mako is small. It's like, yes, San Albino will be a small mine. Yes, San Albino will be a small resource. Yes, it will also be the highest grade open pit only mine in the world. But no, it is but a small component of what can potentially be a very large mining district. And I fully believe that. But as I mentioned earlier, when you are doing something, it's the investor myopia that only focuses on what you're doing. So as much as I tried to convey the message that San Albino is but one of 3 projects that we're working on, it's always kind of an uphill battle. When we actually tried to deliver something real, the only thing that people will be focused on is the real thing, where it's usually a much simpler task for the investor's mindset to be focused on the fake things going on around the mining project. It's amazing to me how much fluff has been out there in the market, and what's been able to capture investors' imaginations, when in reality none of these are going to become mining projects.
Do you think having an outdated PEA and an outdated resource have been obstacles for institutional investors coming in?
Yeah, no question. I think it became time that it was a necessity to update the resource. And then at some point, we're going to have updated economics on this. I still am of the mind that the next time that I want to put economics on this is when we actually deliver our real mine, which is 1,000 tons a day, and that will require a maiden resource for Las Conchitas. But if it's a necessity, going through with MDA earlier today, is that there's a fairly substantial component of measured and indicated resource over at San Albino as a percentage. So for us to elevate this to a reserve, to a pre-feasibility or feasibility study, is not that big of a deal, although it's something that I'd rather not do until we're ready for the 1,000 ton a day scenario.
Okay. And then the final question, I guess, is more of a point about you being active on Twitter, and anyone that's watching this or in the audience should definitely follow Akiba on Twitter. It's where you can get a lot of information about what's going on at site, with construction, with upcoming drill results, etc. So it's a great source of information. So thanks for using that tool. I think investors really like it. And then it's a question more on your social media strategy overall. I know that we've been more active on the Mako platforms, and that'll continue. I think they're wondering, like, are you planning on doing like banner ads, like an elaborated social media strategy, or just continue like with investor updates and engagement? What's your thought?
Well, let's go through the thought process. I'm not a very public individual, and my Twitter is tinged with humor, sometimes off-color humor associated with it, but it is the farthest thing from a joke that you can imagine. So first of all, it starts with the pinned tweet where there's the three objectives, and by the way, every single CEO should be doing this, is that a couple of things. It allows you to make sure that your message is there, both for external purposes, and frankly, it even constrains me, right? So we went through an 1.5-hour presentation. How many times did I bring up the three objectives over at Mako? So it's crucially important to get your message out. Part of this is, one of the, as I mentioned in that penultimate question, was that one of the main negatives about this company in terms of the investor base was Wexford's involvement, what that means. And so through a very concerted effort, I wanted to make sure that this was coming from me personally. This was not about Mako, a Wexford portfolio company. This is coming from, this is what is going on. This is what I want to talk about. This is kind of what I want people to highlight for this particular month. And it's an extremely effective tool. In terms of how this has worked from an A/B testing perspective, so when I started on Twitter last year, I didn't post anything because I didn't know how the tool worked. And then once I got a little bit used to it, I saw what the power of this is. A single tweet is more effective than 3 weeks of retail marketing. I don't think, and forget about even retail marketing, even on the institutional side of things. And with that in mind, it is astounding to me at how sometimes CEOs do not take the platform seriously, right? This is a very powerful, and I don't mean you shouldn't be humorous, like you can like my sense of humor or not, but that's not what I mean by a joke. The ability to make sure that everything that you put on the public channels is there as a powerful tool for you to get your message out, and then try to get people to focus on what's really important. I don't understand, A, why every CEO isn't doing this, big or small, and then B, why CEOs are using this for some other reason than to get their message out. And it's just, it's astounding me. In terms of like the bells and whistles, and by the way, one of the things about the pandemic is that I took up guitar. I'm getting a lot better. My wife has always been an excellent singer, so she's the same, but my guitar is certainly getting better. the main point of this is to make sure that that you have direct communication with your investor base. So I'm kind of thrilled at how it's panned out, but it's certainly not a joke on how I'm establishing this. Even though it might not seem like it, I'm actually a very disciplined tweeter when all is said and done.
It's still a lot of fun, though.
Yeah.
And that wraps it up. It's gone on longer than I would have expected. Akiba, why don't you just end with why you think investors should buy Mako, what they can expect in the coming months, and really why are you involved and what gets you super excited about this project?
Oh, sure. So in terms of expectations, everything right now is getting the ramp up to the 500 ton per day initial mine, first gold pour in January, commercial production in early Q2. And even though the mine itself is not the most important part of Mako, what it is extremely important is once we did that capital raise last month, we are fully funded. And once we're in commercial production, the budget to do everything that we want on projects 2 and 3 are there. The ability to infill Las Conchitas to get to 1,000 tons a day and then eventually prove that this is truly an orogenic gold mining camp. So we're going to be going from a small but highly profitable mine, highest grade open pit mine in the world, to something of material scale. You double the production, you're going to be getting to numbers that even some of the biggest mining companies would be interested in. And then to demonstrate that this really is going to be a truly special regional gold mining camp. So I couldn't be more thrilled with how things are turning out. There'll be incremental data coming out, right? So we'll give updates on all 3 of our projects. So whether it's the resource update coming out in early September from MDA, and again, it's going to show it's the highest grade open pit only mine in the world. But again, it's going to be a small resource. But again, that's a very, very small part of what our land package is about. So I caution people against then falling into the myopic trap. We're going to have some additional drilling on Las Conchitas, so project number 2, and we're going to have our first results coming from our prospecting on the regional stuff as well imminently.
Great. Well, thank you very much for your time, Akiba. I think we've answered all the questions that anyone could possibly ever dream of. And thank you, everyone, for participating. I will make this replay available tomorrow on our YouTube channel, and I'm sure we'll tweet about it quite a bit. So thank you, and have a great afternoon, everyone.
All right, great. All right, thanks, Deb.